What is going on, everyone? Happy Friday. Hope you guys all had a fantastic trading week. The week is finally over. Over. I think for many of us, we kind of need it, right? Not necessarily that it was bad week or anything. I think most of us inside of Evolution Traders today were profitable pretty much on the week. Does that mean you're going to not have losing trades? Of course. I had two losing trades today, but I made more on the winning trade. So it's all about managing the risk. It's all about taking decent setups that are aligning with your strategy, not just firing off the hip and shorting the market because it looks like we could go down, or buying the market looks like we can go up. What I want to cover today is just a little recap. So, to be honest, within the first 45 to 60 minutes of today's open, I felt like we got enough price action that could have lasted us all day long. And the reason I felt like that is because the move off of the open was so violent to the upside. The range was beautiful, wasn't really pulling back all that much. There was a lot of areas of opportunity to make money. I mean, if you just look at the second candle here off today's open, and today's the 13th, so depending on when you're watching this video, we're looking at the 5-minute time frame. We're looking at December the 13th price action, Friday the 13th. And this opening candle here, where we set up a 20 play, this is a play that is one of our staples inside of Evolution Traders. And for many of you guys inside of YouTube who watch these videos, you guys already are pretty familiar with it. But it was a 40-point range, and there was a couple of ways you could have played it. You could have played small size, maybe 2 or 3 micros, and risked maybe $150 max on this potential trade, potentially make $150. You have your scalpers who are looking to play a lot more heavier size, and I'm going to say over one mini contract, and you guys are looking for short gains, those mechanical stop losses, those time stop losses. Again, if you guys don't have a time stop, or you don't know what a time stop is, get with me inside of Evolution Traders. We can definitely work time stop for your style of trading. But what we're looking at here is a beautiful push higher at the 940 Eastern candle that puts in almost the high of day all the way up at 21,895 from an entry price of this 20 SMA play over 842. So we are talking about 40 points worth of push up in a matter of 5 minutes. Okay. And anytime you get this amount of push up this quickly with a hard stop there, this should be a one and done trade, right? And I was kind of pressuring a lot of my traders that are in the room very early in the day. Hey guys, if you made money on this setup, if you actually got back into the setup off momentum because that's how smooth it was, and you made more money, stop trading. Okay, just stop trading altogether. The last thing you ever want to do on a Friday is to make a bunch of money very quickly and then give it all back because you think you're going to make more, or because you think today is going to be easy. And that's a problem that a lot of traders have. And it is what it is. Once we put in this high at 21,908, there was a setup where I was looking for a reversal, and myself and a couple of other traders took this setup here. So we had 4 candles starting from the pre-market that were just essentially straight higher. And then we had this guy, right? We had this guy where we tried to bounce and we failed to put in a new high of day, signaling to me that maybe, okay, because all trade ideas are just maybes until proven true or false, maybe where there was an area of opportunity where we can get in on this candle and kind of use this range as a high of day, as a stop, and assuming we don't break through the range, then we can sit in this trade short. Now, I wish that I would have held this, because literally this went down for over an hour, 2 hours, and there was a lot of money to be made. But again, I got to know who I am as a trader, and I'm not the best trader on the face of the earth. I have a trading style that I like to stick to, and it's comfortable for me. And it's a little bit more for the quicker cash grabs, getting into this candle. This candle here, I was still in this trade, so I started to come up into drawdown just a tad. Then as soon as we started to push down, I just sold, right? And I sold right into my next area of band. The next area of demand for me was here, and that was a linear regression, channel 50. So if you guys are familiar with the way that I trade, I'm a supply and demand trader who trades price action along with, okay, I trade price action along with short-term changes in trends. Then I play levels, right? And to sum it all up, what exactly does all of that mean? It just means I play supply and demand. So when I lose an area of supply, in this case, it's losing the previous 5 minute candle low, giving myself a definitive stop over high of day and taking this trade into the next demand zone. Remember, losing an area of demand into the next area of demand. That's my whole thought process. Supply to supply, demand to demand. So where can I mark out the next area of resistance? Where can I mark out the next area of demand? Now you can choose to do all of this manually. You can choose to do this with indicators. Choose to do this with drawing your own supply and demand zones. Do this with moving averages. You can do this with all sorts of things. Like even if I did not know that this linear regression demand zone is here, well, just kind of looking at this chart from what I've got on the screen, I've got a little bit of a high here in pre-market, and I've also got a wick here where once we confirmed we really shot through. So if I was to draw this line to go straight across here, you're going to see that we pulled all the way back into this zone, right? We actually swept it and tried to make it higher, again, creating a high and the continuation down. You could have also targeted a moving average, like the 20 period moving average. This could have been an entry here, your stop loss again over the range. You can ride this down into the next area of demand. Okay. Same thing here. Once you lose the 20 SMA, you can ride this down into the next area of demand, which was here, my linear regression. And then you can ride this down again into the next area of demand, which was my further linear regression. Now I can choose to put a bunch of supply and demand zones on the chart. I can choose to make it very pretty. I can do a lot of things, but when it comes to you and your trading, you have to do what makes sense to you. So I used to also do this in the past to kind of get supply and demand zones. But I would look at previous swing lows. Okay, I would look at previous swing lows. I look at high of day. I also look at areas where we bounce, where price action is showing clear resistance, clear support. I look at clear rejection zones. And then I can sort of create a little roadmap. So I don't want to particularly be trading inside of a tight range. Okay, so you can see how this line and this line, this line and this line, it's a tight range. I don't want to be in long or short in this range. However, if we break through, which we do here, there's a scalp opportunity here. Okay. Now, once we do put in this low of day and we bounce and we back test, now we are showing that this low of day is acting as support. So maybe I can take a scalp long into demand. Now that's getting a little complex and it's getting a little, um, more advanced, but I'm just trying to paint a picture, right? Because you're going to come to a point in your trading career, your trading journey where you're comfortable with the one particular strategy that you're trading. You are comfortable with the money you are making, and you are going to look for other areas of opportunity to make more money and or build your system more. So if I was to just take off everything on the chart but the 20 period moving average, it is very simple on how we are going to manage that risk and manage our stop losses, manage our take profits. What we are looking for here is on the 20 play, we are using the reason why candle, which is the candle that closes over the 20 SMA, as our stop. So we could essentially draw a stop loss box here, giving ourselves a zone that once we enter coming out of our stop loss box, out of our reason why high, we are looking to take profits on the way up. Now, how much points you're looking to take profits is I would try to target at least 1-to-1 or half of 1 ATR on your reason why. So if the average range of this whole candle from top to low, the entire range of this is around 39 points, maybe I'm looking for something close to 39 points to the upside. Now, if that seems like too big of a stretch and you don't want to hold for that long, maybe you're a little bit more of a scalper, you can take half of the ATR or half of the range, excuse me, which is 20 points. Look for a 20 point take profit. If you're a quick scalper and you just want to load up some heavy size and take a quick scalp, I do something like 3 to 5 point. Okay, so there's 3 levels to this. Now, if you look at your second 20 moving average play, your 20 play, it came here. And the range of this candle was also 40 points. So you do the same thing. You draw your stop loss box. It's going to zone. I should just call it zone instead. But you create your zone. Once you confirm the breakthrough that zone, you take the trade short. And as soon as you get something close to either 20 points or 40 points, you sell out of the trade. So it's a 1-to-1 or a 0.5. Or you can load up more contracts, 2 or 3 contracts, and look for 3 to 5 points for those quick cash grabs. Okay. Just understand that once you do get out of an existing 20 play that is in motion, you don't really want to just keep rebuying short, because you're going to have a bigger probability of getting stopped out. There was another play here. I'll show you guys a loser because, again, not every trade loses, right? Or not every trade wins. There was a losing trade here. Here's an entry for a long position, and your stop loss would be there. Once we confirm at 1220, we immediately get stopped on a next candle. However, it was only a 23-point range. And if you had traded anything earlier in the day, there was a 40-point win here, a 40-point win there. And clearly, the loss of this most recent pre-market swing low. This was a scalp or a hold here. There was a lot of other plays that you could have gotten into. There was also the break of the balance, which was here. That also made money. So you can start to build together a little system where you have multiple areas of interest, multiple things to trade. I hope that didn't overwhelm you. I just kind of wanted to recap a lot of the setups that happened off open because that was the majority of when I did all of work today. And I kind of just went on the call with the guys and girls in traders later, and we kind of just recapped and we went over a couple minor things. I think we took a couple trades actually inside the call today too. That played out pretty well. Had a couple of bounces. But with that being said, I hope you guys all enjoy your week. By the way, guys, Apex finally gave me a discount code. It's been like a year, and I finally got my own code. So very happy about that. D Anthony is the code, best available discount that you can get through Apex at the current time. So right now it's 80% off with $125 activation fees. Make sure to load up, guys, especially going into the next week. We want to have these accounts ready to lock and load. Having multiple accounts is really a benefit to how I trade because it really helps me spread out risk management. Like if someone was to give me one account or 2 accounts and say, these are the only 2 accounts that you have to grow, build, and only trade on, it would be a lot more stressful. Let me fill you guys in on something. The more money you have in trading, the better off you're gonna be. Okay. So someone who I trade options, someone who say has a $2,500 account trade options and stocks with, versus someone who has a $100,000 account to trade options and stocks with, is going to be vastly different, right? In terms of the level of pressure that they're putting on themselves and how they can manage their risk. So for prop firms, if you have 1 or 2 accounts, it's a lot harder to manage your risk because everything feels so intense than when you have 5 accounts, 10 accounts, 15 accounts, right? It's easier to kind of jump in on one trade, one account, and then when that trade is all said and done, little patience, wait for the next setup, and then you take the second setup on another account. So that way, even if you take a handful of trades, 4 or 5 trades in a day, maybe 3 of them win and you had 1 loser, but at least that loser didn't give back everything that you did from other ones. So it's a lot less stressful. Hope that makes sense. If it does, you can load up on those accounts with the discount code Anthony. See on the screen. I'll see all of you guys on